InReturn Capital, a Nairobi-based private equity company that invests in SMEs across East Africa, has announced their merger with Jacana Partners. That's to create an SME private equity group with Pan-African coverage and looking to manage a new SME fund with the value of up to $75 million. That's expected to close later this year. Joining us for more on this merger, Simon Merchant, the CEO at Jacana Partners. Simon, thanks so much for joining us today. So this relationship with InReturn Capital goes back around 3 years, but it's really part of a larger kind of a rebranding and I suppose focus for Jacana. Just give us some context to the merging of the two companies.
Sure. Good afternoon. So Jacana started about 4 years ago. Jacana is a African private equity business focused on investing in small and medium-sized businesses in order to create jobs and also generate financial returns for our investors. And when we started out, what we did was we focused initially on a partnership approach, building partnerships with local investment teams on the ground, both in West Africa, where we partnered with a business called Fidelity Capital that covers Ghana, Liberia, and Sierra Leone. And in East Africa, as you've said, with InReturn Capital, a business focusing on investing in small and medium-sized businesses in Kenya, Uganda, and Tanzania. Mm-hmm. And what we've done together over the last 4 years is really build our experience, build our business model, including some real innovations in SME investing in Africa, and built our credibility and our track record with investors. So today we have 2 teams covering 6 markets. We've invested $20 million in 20 different businesses in a variety of different sectors. And what we're doing today, which I'm very excited about for our business and also for entrepreneurs in East Africa, is we are merging our African and European operations into one new fund manager under the Jacana brand. Mm-hmm. And that business will be the fund manager for the new fund, which we're moving on to raise during the course of this year, which will be $75 million and will enable us to expand our coverage to include other new markets, such as perhaps Nigeria, Ethiopia, Francophone West Africa, markets like that.
Mm-hmm. So just looking at that fund, I mean, you're saying you're looking to close it by the end of this year. $75 million is the goal. Who's investing? I mean, who's typically the investor that you've got interested right now?
Well, as you'll know, the development finance institutions are very important investors in this market in sub-Saharan Africa, in investing in SMEs in a variety of different sectors. We have been building relationships with the development finance institutions in Europe and the US for the last 3 or 4 years. They've had the opportunity to work very closely with us and follow our work and to see the way in which we work and how different it is to other businesses in the marketplace. And as a result of that, we've been selected as a preferred partner for a group of development finance institutions interested in raising a new fund to invest in sub-Saharan Africa in SMEs. Mm-hmm. So the initial focus and the primary focus for the fundraising is the development finance institutions. Having said that, we do see increasing interest and demand for private equity investments from commercial investors both in the region, in East Africa and West Africa, and also high net worth individuals in Europe and the US.
Mm-hmm. In terms of deal size, do you have any targets right now? And of course, the coming together or the merging of InReturn and Jacana, does this mean that you'll be able to target bigger deals?
Well, this is a very important point. Jacana exists with the motivation of creating jobs and supporting long-term economic development in Africa. That's our motivation. Our methodology, however, is 100% for profit and commercial, because we recognize that in order to bring more capital into these markets, we need to generate attractive returns for our investors. So we focus very much on the SME part of the market. And we define that as transaction sizes between $1 million and $5 million, again, across all sectors in a number of different countries. And what's really unique about Jacana is because of our original motivation in founding the business, we are the only Pan-African private equity business that has made a permanent commitment to the SME part of the market. What normally happens in the private equity fund management market is that as fund managers become successful, develop track record with international investors and raise larger funds, they move into larger deal sizes and larger companies. We won't do that. We think that the SME sector is critical for creating jobs in sub-Saharan Africa. We see that as an imperative today, given where the African economies are. And we also believe that if we can continue to develop our business model in the right way, that if you can do something very difficult, which is investing in small businesses in a different and innovative way, you can generate very attractive returns for investors.
Of course, that is the type of returns that they would require, given the risk, I suppose, associated with smaller companies. But talking about that, I mean, what do you see as the biggest challenges to looking at this SME fund and making sure it is successful? Because ultimately, as you say, it will come down to profits and having that track record for investors further down the line.
Well, investing in SMEs in sub-Saharan Africa is extremely challenging. We think to do it successfully, what you need to do is you need to have two elements. You need to have local teams on the ground who understand the local business culture, who have the contact networks in order to be able to source interesting deals that are proprietary and different. And then also who are close to their portfolio companies, because in SME investing, it's not a case of turning up to a board meeting once every 6 months. It's really close support for portfolio companies and providing capital, but also providing expertise. So that's the first element which we think is critical, the local teams on the ground. The second element is just experience in private equity investing. And here's where Jacana's model is very different. We have a group of investment directors at Jacana who've spent on average 20 to 25 years working for very successful private equity businesses in Europe and the US, and we second those investment directors to our local teams. And we believe it's that blend of local and international expertise and the two-way flow of information which makes something very difficult, which is SME investing in Africa, possible.